Hey, what's going on, everybody? This is Aaron Yoon coming at you from New York City. Happy Friday. And happy first Friday of the month. We're into October. We're officially starting the fourth quarter. So I'm going to wrap up some of the third quarter performance. I don't know if you can tell. If you've been paying attention, it's not that great. And we're going to take a look at the red oil portfolio specifically. If you don't already know, if you're new to the channel or if you're new to this type of weekly show, we talk about the iFlip app, which is by far the best app for stock investing for beginners. And there's a lot of different options that you can pick from. Preset Smartfolios that will automatically buy and sell stocks for you, so you don't have to make that decision. So red oil is one of those options. You can see here right now I have this open and there's a bunch of Smartfolios in blue, and then the white stocks are the stocks where I manually trade, where I do the buying and selling by myself, is in white. So let's get started with how the market's been behaving the past month and then the past quarter. So I'm just going to go to the home screen here. And in general, you're not going to find much good news in any market, especially for September. But this isn't actually that surprising. So if you're new to the markets, then you'll find as you get more familiar with it, September is historically a bad month for the stock market. I don't know why. It's not just limited to the 2020 weird COVID pandemic year. It's historically, September has been a bad month for the stock market. Maybe it's because it's back to school season and people are angry about it. I have no idea. I don't really know why, and for our purposes, especially if you're a beginner, it doesn't really matter. But just know that it's kind of a trend. There's a seasonality to the stock market as well. January is typically a good month. I don't know. Maybe the stock market takes on a New Year's resolution or something. I don't know. So there's the seasonality and to the ups and downs of the stock market. So this isn't really that big of a surprise. If we look at our bread and butter Smartfolio, the oldest one, the one that goes back to the release date of this app, all the way back to January, that's pre-COVID. You can see that you can't visibly see any kind of COVID crash in the month of February and March. It dodged it perfectly. But in September, it's allowing for this big correction. Now, if I draw an imaginary line that kind of connects the bottoms of these little, there's peaks and valleys, right? So I'm going to call this a valley. And another valley, right? The bottoms they look like, little valleys here and there. If I just connect the lowest of the lows, then you can see that it's not that bad. It's still kind of a straight linear line up, right? The low points. So it doesn't surprise me that much that it allowed this big drop to happen from September to, well, October right now, right? In February, it did not allow that massive 35% drop to happen. It flattened out, it exited the market, and minimized that loss perfectly. Basically, didn't lose at all. That's why it's flat over here. It started to lose a couple of days, and then from there it just rocketed up. But it did allow this loss to happen. Okay, this is the hardest decision that you're going to have to make as a trader, investor, whatever. I don't care what they're pretty much the same thing. The hardest decision you're going to have to make is, when do you get in and when do you get out? And this AI is making that decision for you for free and completely automatically. So it knew to get out in March, and it knew to stay in September. both times when a lot of people on the internet are kind of going crazy, like, oh my God, should I sell? Should I take my profits? What should I do? Oh my God, the market's going down again. Is this a second crash? What's happening? You can see you'll find a ton. You will find no shortage of videos on YouTube about the second crash in September. If you like that drama, then go right ahead and get sucked into it. But if you want to put your money to it, it's probably better to let the AI do the investing for you, the decision making for you. So this is our bread and butter. And as you can see, I have, this is kind of where I really started these types of videos. I have $1,000 from January. And today I'm sitting in $1,300. Right, so I am up 31% for the year. Show me what index fund is up 31% for the year. I challenge you for that. Because this essentially is my index fund experience. Just set it, forget it, just watch it, hope and pray, whatever. But I'm just sitting on my hands and watching. That's the index fund experience. I'm sitting on 31%. I don't know any index fund that is in the broad index, right? That is not to a specific sector. That is like very focused on Amazon or Tesla or something like that. That is very, very broad, like the S&P 500, for example. That is up double digits. I don't know. Show me. Drop down in the comment section if you have an index fund that you've been holding since January that is close to 30%. I'd love to see it. Drop down in the comment section below and let me know what the symbol is, because I'd love to do a review comparison. Maybe I'll even buy it myself if it's really that good. Okay, so today's video is not really about this. This is just a performance kind of analysis. If we go down specifically to the 3 month mark, that'll be from July 1st to October 1st. That's pretty much Q3. You can see that the starting point and the ending point, which was yesterday, which was right here, we did make a gain. Okay, it wasn't as exciting as if we were to have ended up here, but you can't always be winning. The market goes up and down, and the point is, in the past 3 months, we actually did gain, even though the past month, September, felt pretty awful. It did feel awful, I'm not gonna lie. Do I wish that it could have dodged this completely? Obviously, who wouldn't want that? But am I willing to settle for having done nothing, literally having done no work, and allow for to go from, on July 1st, $1,212 to today sitting at the end of the quarter, which is here, $1,334. Am I okay making 10% in that quarter? Doing nothing? I don't think a lot of people are 10% for the year. So I'm okay, happy with 10% profits for the quarter, right? This app is just that good. And again, it's free. Okay, just drop down into the description below and you can get it yourself. Now, today's video is mostly going to be about the red oil, which will not have the same kind of performance. I promise you that. If you look at red oil for the past quarter, you're going to, at first glance, it looks pretty awful. It looks like, it's definitely negative. We started off the quarter with $160. This portfolio only requires like $150 to even buy. So it was kind of, I was happy to put money into it to demonstrate how it performs for you guys. So, we started with I made modest gains, but I was sitting at $161 in July. And by the end of September, I had lost like $30. That is not, percentage-wise, that is not a small number. You can see it percentage-wise right here. It is a negative 20% drop. It's not good. Not good at all. But I'm okay with it. Why? Because the paradigm of investing for something like this, the philosophy of investing in this portfolio is completely different than what you would expect out of that index fund kind of experience that we talked about with the SPY Plus. Okay, let's take a look at the let's start off by looking at the description of what this Smartfolio, this red oil Smartfolio, is all about. So this is for investors who can look a year or two out, similar to the SPY that we covered last week. Red oil is a Smartfolio that represents an opportunity to double the value of your investment while only risking half of the investment. A 2-to-1 risk-reward opportunity. The construction and reward risk ratio is managed in real time by the iFlip index algorithm that tracks the aggregate movement in the form of, okay, it's starting to get technical here. So if you're starting to gloss over, it's totally fine, right? The important thing is you're trying to double your money, risking only half, right? You're going for a 2-to-1. The components are well-known energy-related companies that have gone down significantly due to the coronavirus. If a user believes that demand for oil will increase over time from current levels, April 2020, nearby. Okay, so it's talking about, you know, the crude oil futures. That's a technical thing that you don't really have to worry about. If a user, just focus on this part, if a user believes that the demand for oil will increase over time from where it is currently, this was designed in April 2020, right? This was written and created in April. Then this Smartfolio should serve them well. Okay, so the idea here is we're playing the long game, semi-long. A year or two isn't even that long in the scope of investing, but what the statement that we're making here, we're betting on oil companies, the demand for oil to go up and back to normal. And when life is kind of back to normal, when coronavirus isn't something that is plaguing the world. If we think that when the coronavirus stops plaguing the world, that oil demand will go back up to even kind of what it was before. It doesn't have to hit the same levels. If it just kind of hits the same levels, then we should be able to double our money with relatively low risk, a 2-to-1 risk. Okay, right now we're as of end of September. Right now it's October 2nd. We're still smack in the middle of lockdown, right? And it's in like COVID. Deaths are at, you know, they hit the new highs. They hit millions or whatever the numbers. I don't even know anymore because the news is just so bad every day. It just keeps getting worse and worse. So we don't really see when it's gonna end. We don't really know. We're hoping for a functioning vaccine to be released, and then we have to wait even further for it to be distributed, and then maybe life will start getting back to normal. So until that happens, you can't really expect oil companies to rally. It wouldn't make any sense. Why would the demand for oil go up all of a sudden when there's still this much COVID uncertainty in the world? But that's why we're getting in now, and we are looking for, I mean, for me, I only have $150 with this. If I go all the way to the beginning, I only started with $150. This is for me to show you how this algorithm, this Smartfolio works. It was kind of a no-brainer because the barrier to entry was so low. This is definitely not where I personally put the majority of my money. This is more of like a finite kind of gamble that oil is going to recover and I want to put money on it in a safe way, right? So if you agree with that kind of philosophy, then it might be worth parking some money here, but you have to be able to look a year or two out until life kind of comes back to normal. There's a vaccine widely distributed. We have herd immunity. People are traveling again. People are vacationing again. That is when you will see this really come to, like, really show its reward. Right now, we're still just kind of in the risky phase. Like, hopefully it doesn't go lower. Like, there's not that much room to go lower, but hopefully it doesn't keep going lower. Okay? That's the kind of philosophy that you have. You're either kind of going for, you're going for a doubling your investment, risking only half your investment, right? It's not a one-to-one as you would normally place a bet at like a casino or something like that, right? There's one last thing that I want to mention here that I guess it's almost as if the algorithm and the iFlip app knew I was going to do a video today because it bought one of the stocks today. And I wanted to show you that. I didn't do anything. I did absolutely nothing except just kind of waiting. I don't really pay attention to this that much unless I'm prepping for a video. And I got an email notification today that said that I bought, like a buy order was completed. I'm like, I wonder what the iFlip app bought. I didn't tell it to buy anything specifically. I didn't tell it to buy anything manually, but it did buy something all by itself. What did it buy? Oxy. I don't actually even know what that company is. It's a petroleum company, but I forgot what it's called. But it bought one share at $9.35. I guess I had that kind of buying power dedicated to it still. And it bought a share at $9.35. You know, at the market open, a few minutes after the market open at 9:34 this morning. And let's see what happened. Oh, no, let me... okay, so let's click on Oxy, OXY. It is Occidental Petroleum Corporation. Okay, I'm not really familiar with that company, but luckily I don't have to be because I'm not making the decisions. Okay, so let's let this chart load up. This always takes, sometimes it takes a little bit of a refresh to load up. Yep, there we go. So we just let this chart load up, and it did have a good day. It went up today. That's great. I don't know if it knew that it was going to go up from 931 to... I don't know if it knew it was going to go up 50 cents. That's not that big of a deal. It went up, you know, that's like a 2% move. Not bad, but I guess it was looking off of... let's see. Oh, interesting. Okay, so I'm looking at this for the very first time, so I needed a minute to digest what's happening. But I don't know if you're realizing this, but obviously the easiest way to explain how to win in the stock market, easily said, but very, very difficult to accomplish, is buy low, sell high. Right? So you want to buy at the lowest prices, and that's exactly what it did. Right? It bought at $9.35 or something like that, right? It bought at $9.35. And that's I mean, I think I only had enough money because I only have 160 some odd dollars in this, dedicated to this Smartfolio. But it picked a really good price, right? It picked the bottom price pretty much, and then it went up from there, and hopefully it continues to go up. We don't know if it's gonna go down again on Monday or next week. Nobody knows that, but so far it picked a pretty good spot to get in, right? That's a pretty good spot. It started, you know, this is September 28th. This is like Monday of this week. It was at $10.50. It went down, and it was pretty damn close to buying the bottom price for the week. I'm not going to really complain about that, right? That's better than what most people can pull off. If I told a novice to start looking at OXY on Monday and they saw it go down, there's a good chance that they would not have known to buy it and wait for it to be down here. There's a very good chance they saw this little, downturn and starting to recover there, and they were going to buy up here. That's a very, very common place for people, especially novices. I don't know that I think I would have gotten suckered in to buy it here, but the AI knew not to, right? It waited until today to buy it because the price hit a better level. So the AI is doing this work for you, so you don't have to. It's just I'm always amazed. I'm not always blown away. In the short term, but I'm almost always satisfied and often impressed in the long term, which is more important, right? But this is pretty. I mean, I don't know. This is pretty good. I mean, we'll see. We'll see if it's a good buy, and when I talk about red oil next, which will be in a couple of weeks, we will definitely bookmark OXY and see how it did, because it bought it today, and I'm eager, as I'm sure you are, to see how well it's going to do in the upcoming few weeks. Okay, so that's really it for the red oil portfolio. It is down 20% off for the quarter, right? Not a very good quarter, but that's not the point. We're not measuring success in quarters in this particular portfolio. We're measuring success. We're just biding time, and we're really just waiting for like a year or two out, when coronavirus is no longer a plague on the world and life is kind of back to normal, more or less. Therefore, travel and the demand for oil is back to normal. Now, is there a chance that between now and then, like some kind of teleportation device gets invented and is free for everybody, and there's no need for fossil fuel or any kind of petroleum products ever? Plastics are replaced with this recyclable organic material, and we don't need, and all oil goes to zero? I guess it's possible, but it's very, very unlikely. So that is the statement that we're making here, okay? If you have any questions or any comments about this, just drop down to the comment section below and leave a note if you have any comments. But we're moving on. I am going to talk about how I'm actually going to buy stuff, right? I'm actually going to do a live trade. So it's not really a live trade. The market is technically closed right now, but I'm going to queue it up so that it does something on Monday. So here's what I'm going to do. Now let's talk about how you would trade manually. If I hit start trading and hit manual here, I can basically do what all the other apps out there allow you to do, which is manually buy stocks on my own. And there is a stock that I've been wanting to buy, and it's this is a somewhat of a stock that I'm interested in holding, but it's also a demo purpose. Happens to be a cheap $4 stock, so I don't mind just buying a couple of shares for demo purposes. I remember when, and the stock I'm talking about is AMC, the largest movie theater franchise or network, or if you will. I think in the world, definitely in America, AMC theaters are the biggest, but I think they're the biggest in the world as well. I might be wrong about that, but they're definitely the leader. There was a lot of there's a lot of talk about AMC shutting down a lot of their locations internationally because of the coronavirus. Movie theaters and social distancing just doesn't really work very well. Some locations have started opening up, and AMC was in particular danger because when the COVID pandemic hit, AMC was already in debt because they had just spent billions and billions and billions of dollars renovating their theaters. So it was literally like the worst possible time. And I remember this. So if we just take a look back at the history, right around, this is the coronavirus crash that just pushed all stocks off a cliff. All right, and here we are at the bottom. This is like March, and this is the And even through April, it was like, is AMC going to go bankrupt? What's going to happen? AMC stocks fall to $2 a share. And I was like, wow, I really don't see that AMC is not going to find help. They're the biggest. Like it was almost like the impression that I got was like they're kind of too big to fail. They're the biggest franchise. You don't let the biggest movie brand, you don't let Coca-Cola fail, because that would just ensue mass panic, internationally. And AMC is basically the Coca-Cola of the movie theater world. So I'm like, I can't imagine that AMC is going to actually go bankrupt. Like someone's going to rescue it. That was just my hunch. And at the time I was like, it's a $2 stock is very tempting to buy, but I didn't, right? I'm not going to explain why, but I didn't. And now you can see that, the $2 stock went all the way up to like 7 or so. You more than tripled your money if you're going to be one of those, short-term kind of like, stock traders, which I am not. That's kind of why I stopped looking at it. But you would have more than tripled your money in a span from, let's see, April to September 8th. And since then, it's kind of been, it's kind of retraced down to this like $4 something level. And it's kind of the same thing. I am more confident that, similar to what we just talked about with the red oil, I am personally confident that movie theaters, especially AMC, will become popularized again, and more people will start going to the movies again when a vaccine is released and whatnot. So similar philosophy to the red oil. When life becomes back to normal, I feel that movie theaters will fill up again. So for me, even though I am not catching it at the very bottom, this $2 price, I'm catching it at 4 something, I'm okay with it. Plus, it serves multiple purposes. I'm showing you how to put an order in if you want. And for me, I'm very comfortable with it. That is the most important thing. If you're going to do the decision making on your own, be okay with losing all of it. Okay? And I'm only going to buy 10 shares. So it's going to be $46. So right here in this window, in case you missed it, in this window over here, obviously I'm on the desktop version. If you're on the mobile version, this is more vertical. I like the desktop version, especially for these types of demo videos. So I'm going to stick with this, but I'm going to type in 10 shares, and at $4.62 a share, my total cost is going to be $46.20. No biggie, no big deal at all. Okay. Actually, I'm gonna be better safe than sorry, because I do want to buy something else as well. I'm just gonna buy 8 shares just to make sure that I'm not gonna run into any kind of issues with what I'm gonna buy next. So let me take that back. I'm only gonna buy 8 shares because I want to leave room to do another purchase, and I'll show you exactly what I'm talking about. Okay. I'm gonna do a market buy with this stock, which means I'm just going to buy on the open no matter what. Okay, this is not algorithmically managed, so it's going to buy no matter what the price is at the on the open. Now that I'm thinking about it, maybe I'm going to show you that I'm going to do half. I'm going to split half and half. Okay, so a market buy means, let me just start all over again, if you don't mind. So a market purchase means that I am going to buy no matter what the price is on the open. And I am okay with that. I am okay with whatever that's going to be. I'm only going to buy 4 shares of AMC at market. Okay? And that means that I'm going to spend a total of $18.48. I'm booking $18.48 dollars worth of a purchase to buy AMC. So I'm going to click review order, and then I'm going to click submit. You'll see that this is an after hours order. This is Friday at 5:40 p.m. So the market is closed. It's going to do this on the next market open, which is Monday. Keep in mind that the price could be different on the open from when you place the order, right? Because between now and Monday morning, the price could change. I don't care, personally, for this particular situation. Normally, it would actually matter, right? So that's why I'm going to do another trade. And you can do a limit buy. A limit buy means, see how I actually am able to set a price? I can actually put in another 4 shares, and I can set the price that I want to buy at, which is, let's see, I'm gonna set it as I want to get in, but it's difficult to see where. Like, this is another very, very difficult decision for traders to make. Is like, what price do I want to actually get in at, right? And if I can actually, normally I would look at like a candlestick chart to do a proper analysis of this, but I'm just gonna say, you know, like 450. Okay, if it actually comes down here. Now, in real life, if you're a more serious stock trader, you wouldn't arbitrarily just pick a price like I just did. Okay, that is not how you trade. But for me, this is more of a demo. Again, right? I can't emphasize that enough. This is not how I normally trade. This is just a demo for how to place orders. And normally you would want to buy at a lower price than what it's at, right? It wouldn't actually make sense to be like, hey, you know what? The price is at 465, but I want to wait till it gets more expensive to buy. That almost is, that just doesn't make sense. You would never do that for anything else that you're buying, like a pair of shoes. Like, oh, these shoes are on sale, normally $100. Now you're selling them for 70. I'm gonna wait till you price it at 100 again because I want to pay more. That's how much I love it. You would never do that. It doesn't make any sense. So you would always put a limit order for a price lower than what it is. But if you put it too low, like it might never ever even get there. The art of finding that sweet spot price is a dilemma of traders that you're just gonna have to face. So I'm gonna click review order. I picked, how did I come across 450? It's a kind of a nice round number, but it's also the number, I can't really like nail this, whatever this is right here. But it seems to be around 450, so I'm just going to click review order. Do I care if it gets filled? Do I not care? I don't really care that much. That's why I'm so comfortable just kind of winging it and doing a demo. That's how all your trades should be. You shouldn't be invested so heavily emotionally for any one trade. And that's and I've been there. I've totally done that. I've been guilty of that many, many, many times. But not in this market, in other markets. And I've learned the hard way that it's just not worth the stress. That's why I love this app, because this app with the algorithmic Smartfolios, it takes away that stress completely. So I have a bunch of, I actually have a couple of emails that came through to let me know. Okay, like right here. Your buy order will be submitted on market open. You have submitted a market order to buy 4 shares. So this is like my confirmation. Okay, for that. And that takes care of my trade for AMC. Now, if I wanted, let's say AMC doubles or something, and I'm ready to sell, then I would come in here and I would sell. Same situation. If I just, right now I don't have any shares to sell, so it doesn't make any sense. But I could sell all of my shares, some of my shares, half my shares, whatever I want. And if I click market, it'll do it right there and then. If the market's closed, it'll do it on the open. But if I want to set a price, then I can preemptively say, hey, let's say I got in at 450. I want to get out at 9. I want to get out when I double my money. So I want to say like, all right, I can enter 9 here, and I can get rid of either all my shares or just 2 of my shares or whatever. Obviously not more than you actually have. And you can set it up and queue up the order so that it will do it automatically. Okay, this is just very standard order routing and in terms of trading. So now I am going to, the last thing that I want to do today. Now let's look at start trading, and let's look at another type of portfolio. Now I am actually on the highest level paid plan, and I've been on this plan for a while. So if you are on the free app, you will definitely not be able to see this, or it won't be an option available to you. But what we have here is the 4Q rotate portfolio. Smartfolio, excuse me. The 4Q rotate Smartfolio. Now, the results for this is very weird. And that's why, if anything, I probably should have bought this first, because it's the most, it's the weirdest one to look at theoretical values, and it's probably the most valuable to show with actual money. Because if you look at the portfolios, you're like, what the hell is this? This doesn't make, I don't understand what's with these lines going up and down. Like, who drew these? It looks like an Etch-a-Sketch. What the hell is this? And I totally understand why you would feel that way. Let's look at the description. First of all, you can see that the risk factor is aggressive. So this is not for everybody. The 4Q rotate adjusts based on the highest directional beta symbols in the iFlip traded stocks based on the previous quarter. Every quarter, the mix of stocks will likely change. This is an aggressive Smartfolio and will experience greater volatility, ups and downs, than other conservative Smartfolios. You need to ask yourself, are you comfortable with that? Okay. Now, if I'm just investing the minimum, I am okay with that. No problem. Especially since I recognize all the stocks in here. Right? It's the S&P 500. We're doing more of the S&P 500, more of the Apple. Right? I already have exposure to that in the SPY Plus, but it also sprinkles in a little bit of Microsoft and some AT&T here. Whoa, that's new. I guess it timed out and it wanted me to log in again. Give me a sec. Let me get back to start trading. Let me get back to that 4Q rotation. Okay. So just to recap, I do have exposure to the SPY and the Apple already from the SPY Plus Smartfolio. This includes a little bit of more of it. It really can't help. It really can't hurt to have some more of it. Not a big deal. It throws in some Microsoft in there. Microsoft is a solid stock. Let's see. So you'll see here that in the past year, it didn't add Microsoft until April 30th. That's why behind it, you see a flat line. So the idea with this portfolio, I keep saying the wrong thing. The idea of this Smartfolio is that every quarter, it's going to buy a new set of stocks, if applicable, right? I feel like, just in general, I feel like these stocks have been here for a while. I am not entirely sure. But it's a really good, it's an awesome way to participate in this type of video that I make on a regular basis. Let's see what stocks does it buy. So if you want to see new set of stocks on a regular basis, I don't know that that's exactly a healthy way to invest, but if you just can't help it, that's what you need to see, then this is for you. I don't think necessarily, again, that's a good thing, but whatever, that's just my opinion. So let's take a look at this here. Like, we've talked about SPY, the S&P 500 and Apple at length. We threw in Microsoft in there. Let's take a look at AT&T, which we've talked about. It's in, you see a lot of overlap in these Smartfolios. Looking at AT&T real quick, you will see that AT&T is still at it's a pretty good deal in terms of, you know, it's taken kind of a beating. So oh boy. Okay, so AT&T has taken kind of a beating from its highs up here, right? It was as high as 37 something. Now it's down to you know, 28 or so. Okay, no problem. I'm going to click start trading. Nope, that was the wrong thing. I'm going to go back and I'm going to invest in this 4Q rotate. Now, when you buy a Smartfolio, the order process looks similar, but it's slightly different because there's no shares. You're just investing in, you're just putting money into it, kind of like you would an index fund, right? So it's very similar to the index fund, mutual fund, ETF purchasing kind of experience, right? You're just dropping money into an account with like a collection or a bundle of stocks, and then the broker kind of buys each one. In this case, the AI is going to buy each one when the time is right. So I need a minimum of $1,050, which I have here. I have $1,059 worth of buying power. So I'm going to put in 1,050, just to be clear there. And I'm going to click review order, and I'm going to click confirm purchase. It's that simple. That's how simple it is to put in an order in this app. Just to be super clear, let's go into the activity tab, and you can see that there are pending actions. You can see there are pending actions here. This $1,050 that I just invested into the 4Q rotate, and the limit order for 4 shares of AMC for 18 bucks, and the market order for AMC on the open of Monday morning. No matter what price it's at, it might not necessarily be this price. That's the thing with the market order. It might be something else, but I'm giving it permission to just buy it no matter what, because I just want it that bad. That's what I'm basically saying when I market order. Okay, and I'm totally okay with that. I have a bunch of stuff pending. This stuff will all go into action on Monday, and then I will do another video next Friday to sum up the week and see how this stuff has performed on to start off the 4th quarter of the year, and we'll see how it goes through the end of the year. So I thought this was a really good time to buy the 4Q rotate, because it's the beginning of the quarter, and it's just kind of, you know, very nice and neat and clean for us to do a purchase and a review in the upcoming months, weeks and months. So that's it for today. It's a little bit longer because I did a lot of different things today, but that concludes our session here. And everybody have a great weekend, and stay tuned for the next video from YouTube. Bye, everybody.